Welcome, everybody. Thanks, everybody, for hopping in this evening. For those of you who haven't been to one of these style lectures before, we kind of call this a podcast where we have a larger topic that we're all going to kind of focus around with a various group of people here, some of our staff team in here to contribute. And obviously, the highlight of the evening, is going to be Tilio. This guy hasn't been in one of our lectures, honestly, probably since 2021, I think was the last time we had you in here. Those of you who don't know him, I'm sure you could give a little bit of an introduction to yourself, Tilio, but why don't we start with that? Why don't you say hello, introduce yourself a little bit?
Yeah, well, now you know my voice, but yeah, introduction. MMA and I built this place back in 2020, and back then I was, adapting to the market is what you always got to do. So I was more active then, I guess, in the terms of the Discord scalping left and right. But you had that volatility then, the Dow making 1,000 point intraday swing. So as far as that, since the last Fed kind of hike, really, that's where I tailored more towards just swinging. And why you can look at the chart there that Toasty has up, and that's because I don't want to miss those moves. So you kind of see the peak there back in whatever that was, early 2022, I believe. I mean, you had this chop, and anytime we're in like a bear market like that, your first instinct's always to buy the dip, because obviously that's the gravitational force of the market. So since we got that Fed kind of pivot a few quarters ago, that's why I'm less active, I would say, on the alerts, is because I'm going for these swings, these more fundamental macro swings. So that's basically what I'm doing now, and kind of what I'm trying to bring into the Discord there with these newsletters or any of these kind of write-ups, because we never really had that in there. And when MMA and I were talking, my main goal was transitioning into providing that kind of information, but we really didn't have a good team back then. I think we have a solid team now, the best it's ever been, aside from a few kind of loose screws like Toasty. But so delegating was an issue back then, and now I think we're in a comfortable spot to, there's a lot of good people here, so you really don't need me kind of in the role that I used to have. So yeah, I mean that's kind of where I'm at right now, is taking advantage of these more fundamental with, I'd say, 50% technical kind of base trade. So, and I think it's tailored towards a different group of the Discord. Not everyone can be in here all day scalping left and right, day trading left and right, and taking that risk too. You're taking more trades. There's more room for error. So these kind of more, not even longer term, really, just kind of a different component as to why I'm taking them. It's a lot less stress. So it's, like I said, tailored maybe towards a different crowd, kind of the people working 9 to 5 jobs and such.
Yeah, and just to kind of show some of the things that you're providing these days, all of it is really heavily educational. So for those of you who aren't currently checking it out, I mean, I actually haven't even read this message myself in full.
Thanks.
But I mean, dude, I'm sick. Anyway, at least I don't lie. He's got the weekly newsletter, which breaks down a lot of the things that we'll end up talking about tonight. And if it's not something that you're currently subscribed to or not something that you're currently reading on a weekly basis, you're definitely doing yourself a disservice, especially considering, you're paying for everything to be here. You might as well take as big of an advantage as possible. But that's Tilio. Obviously, you could say he's our boss. He's in charge of the place around here. Definitely not MMA. But thanks for kind of giving that breakdown with Tilio here. We're also joined by a couple other of our staff team members. So we have Dirty River. You can say hello if you want. I'm sure everybody knows him. He might not talk. All right, he's working the trap. We got Rev here tonight. If you'd like to say hello.
Hey, what's up, guys? How you doing?
We got 1K as well.
Good evening, team.
And finally, we have Nando, which I don't know if he's talking about. He's been a little bit silent.
What's up, guys? I'll share my inputs in here.
Here he is. So yeah, got a good group of people here tonight, as Tilio mentioned, and working with us. And yeah, so we're excited to get into it. Tilio's already kind of broken down the big perspective on kind of where things are at, where we're headed, and kind of some of the information that we saw today. That said, the big idea behind this lecture is going to talk a lot about some of the larger overhanging, I guess, macro conditions that have brought the market to where it is today, including the intraday move that we saw, aggressive move higher across the really entire market, and kind of where we're headed from here. So just to kind of kick it off, obviously from a technical standpoint, a lot of us in here have kind of started to notice that we were getting this reversal really back down in the late 2022, early 23 areas. And you could really tell that this chart began to change really significantly when we started to see some larger significant dips actually being bought and setting some higher lows. And just to kind of point it out, obviously throughout all of 2022, significant bear market downtrend, if you will. And once we started to see some larger term higher lows being set, that's really where you have to start pivoting your bias, at least slightly, or kind of drop down that bear bias by some increment. And really this, at least for me in specific, this dip right here, this was when we had multiple of those banks fail. I believe that was Silicon Valley, that other shitty one. That other one fail. And we saw that dip get bought. Really aggressively, right? In both the SPY, both the Qs. And really that was the time and place for me to ultimately flip bullish on a larger term. And now obviously ever since then, right, I think myself and many others have kind of stuck to that bias and been significantly rewarded for that. Now that said, right, it doesn't really mean anything the way you were feeling almost a year ago at this point in time, but where are things headed from this point? Obviously we've had a significant move higher off these lows, significant pullback off these recent swing highs, and now back trading, a couple bucks off the all-time highs. I mean, really we're sitting, less than 1%, if that, below the all-time highs at this point. So I think the large question for everybody, and for those that don't know, is kind of what happened today and why this move that we got is so significant, and what came out of the Fed and why that's so significant, and kind of where we're headed from here. So I wanted to start, obviously we got the larger term kind of focus narrowed down here. And again, right, I'm sure a lot of you in here have really no idea why this move happened the way it did today. And a lot of you, I'm sure, probably saw this and bought some calls here and were like, oh, great, I'm making money. I got no idea why we got this big green bar on high volume, and I don't have a damn clue why I'm buying calls. And today was really just a, really obvious day once you got that report out of the Fed. And it's something that Tilio was preaching I think all week, is wait for that decision out of the Fed before you start to execute trades on it. And I mean, it couldn't have been better advice. So just to kind of break down, those of you who don't know what happened today, today we had a meeting with but today a kind of release of the meeting minutes from the Federal Open Market Committee took place. And essentially that involves a lot of the governors of the Federal Reserve, and who the chairman of is Chair Powell, who I'm sure many of you may or may not be familiar with the name. Ultimately, a lot of people were, at least even some people texted me, were like, oh, rates were flat. And that wasn't nearly the significant part of the news release from today. Seeing that rates were flat, markets had priced that in rather significantly. I believe there is a 99.7% chance that rates were going to be flat today. The real kind of overhanging cloud, if you will, coming out of today's data was that a lot of the market has been pricing in these rate cuts for the future. And just to pull up this FedWatch tool, it's changed a little bit now that we've kind of gotten some data and things have varied, and I don't have all the screenshots of what things look like. But this tool here kind of shows what the Fed, what the market is planning for the Federal Reserve to do in, the next couple meetings. And just for those of you who don't know, just to kind of take a quick step back, the Federal Reserve essentially sets the target interest rate for their funds. So that's the Fed fund rate, Fed fund rate, can't talk. And essentially that rate is the benchmark for a lot of other bonds or treasury coupons or whatever you want to call them. This FedWatch tool essentially shows what the market is planning for the Fed to do. This isn't any decision out of the Fed. This is just showing what the market is expecting. And this tool going into today was indicating that the market was expecting multiple rate cuts coming into the following year, 2024, which the Fed has not officially announced that at all or validated those claims. So the market came into today expecting these rate cuts, but really with no backing to really be expecting those. And today, one of the most significant things coming out of that release was the Fed announcing that they actually plan on making rate cuts in 2024. Now, I don't believe they provided any specific dates. However, they provided that their target rate for 2024 would end up somewhere around 4.5%, which from, I believe, the 5.25% or 525 basis point rate currently, that's involves about 325 basis point cuts, which really truly validates exactly what the market was saying and justifies this move that we got intraday with extreme significance. And really, it just goes to show, kind of like Tilio was talking about earlier, those rate sensitive sectors, your small caps, regional banks, those types of names that are sensitive to rates for different reasons, right? For example, small caps generally hold a lot of debt, generally are going to be a little bit less profitable. So as rates come down, their debt becomes a little bit cheaper if they are to refinance, and their stability becomes a little bit stronger. And as a result, we got significant moves out of those names, really significant bars, bear bar or bull bars closing near their high, significant volume on these days. So real significant kind of continuation of trend across the market here. So I would say the big kind of overhanging question now is what's next? And I want to kind of pass it to Tilio and open the discussion to everybody else. What's your thoughts? And whoever decides they want to start talking first, what's your thoughts on kind of what's happened today, how we got here, and what are you looking for next? And Tilio started to talk about this, so maybe if you want to continue or repeat some of the things you said, feel free. Your mic's muted.
After a move like this, obviously you want to be a little bit more cautiously bullish, I would say. Like I said, that 4743 SPX, that's your 127.2 fib extension. So, and someone asked Toasty what that comes out to on the SPY. So if you go back to the July peaks and run that fib retracement from the peak there to the October lows, and you might have to add the 1.272 fib, and that should give you what it comes out to on SPY. So essentially you're hitting that right now in the after hours. So that would be the first level I watch. I mean, there's really not more, and you have your volume profile study up, and I'm sure there's going to be a decent gap really back up into all-time highs. So we cleared that 1272 fib extension, and yeah, I think you're going to see those all-time highs. What are we going to do from there? It's kind of hard to say. If we run into there here and just say January 5th, obviously we're going to be extremely overbought at that point, and we're going to be due for, a bullish pause, I would say. But into next year, yeah, you obviously want to keep interest in your Mag 7 stocks. I mean, this whole AI kind of wave is going to be adding a lot of revenues. I mean, we've seen some of that, obviously, especially out of NVIDIA. But I would also be watching, kind of like what I mentioned, those under the radar names that I don't want to say lagged, especially after this rally, but they definitely have more upside. And then just watch for any kind of rotation into there. So today, for example, as mentioned earlier, you got some of your Mag 7 stocks either red on the day or just kind of flat. So you might be seeing signs of that. So, looking at your market caps less than 50 billion, I would say could be areas to look for if you want to catch any potential high flyer. And that's just because a lot of these companies, they have debt on their balance sheet, and that debt's been extremely hard to finance with high interest rates. So that's why they're going to get some love there. Home builders, same kind of thing. Any real estate names, same thing there. But like I said, you got to be cautiously bullish after a move like this. You're probably going to get, I'd say, at least a 1 to 2 day continuation on that second day. Going into Friday, I would be even more cautious than going into tomorrow. But you don't have to play the downside there. And that's kind of what I've been doing ever since we I don't know what swing high it was, but right when we broke that 4,500, 4,540 level, trading up to 4,600 back down, that kind of 3-week time period, we were in that chop zone. I don't think I traded any puts at that point. It was really just kind of buy the dip at that point. So that's kind of what you can be looking for. But of course, you got to know when to trim your upside runners that you're in. And a day like today would be the day to do that. Trim, roll out, get a little bit of extra time. That's kind of like what I did on KRE, going from the weekly 50 strike calls at that 2 p.m. release into the January 50 strike calls. Now, obviously, I'm paying a little bit more per contract, but I get that continuation up into the target I want to take it to, which is about 54. So yeah, like I said, you kind of got the all clear today. Now I wouldn't say all clear into all of 2024, but you got the Fed finally matching the market, and like Toasty said, 3 or 4 rate cuts now that the Fed is pricing in or expecting to price into the end of next year, 2024. And that was significant because we were sitting at a 5.1% expectations. So they added 2 more rate cuts into that. So just looking off of that, they think the job's done. They probably know the job's done. Of course, they're not going to say you get the stock market rallying like it is. 401ks go up, and that could be a concern to inflation. But the other tricky part then is obviously later next year elections. That's when you get a lot of kind of policy changes that can affect things. So, but most election years are kind of bullish, especially when you get all the stimulus that we're going to be getting. So on that front, stimulus wise, and especially with, these hikes maybe being or cuts on the way, you could also look at maybe some of your industrial stocks. Caterpillar, one that I'd probably be watching because the IRA, the Inflation Reduction Act, that really hasn't passed through the entire economy yet. So there's still a lot of stimulus there that's going to be kind of definitely tailored out this last year. So CAT could be one to look for. I think it's got the upside there. As far as valuation too, I mean, CAT's gotten they made a nice run, but they got pretty hit there. But a lot of these, and I'm not sure that I would say CAT's entirely cyclical, but a lot of these names, they might seem kind of pricey on a valuation metric, but that's because a lot of the expectations, EPS expectations going forward, they're well below the market. So they seem pricey for the time being, and it might not look like an attractive buy, but I think some of those industrial names you consider buying too. Like I said, you're going to have more stimulus kind of flowing through the economy this last year, and especially if we get this economic expansion. I'm not saying we will, but there'll be ones to benefit. So just off the top of my head, those are probably some areas I'd be looking for. And I know I didn't mention any Mag 7 names, but like I said, you always got to have some exposure to them, especially with this AI kind of craze heating up. I think we're finally passing the hurdle where there was concerns that could be like the dot-com bubble. Um, but I don't think that's the case because we're seeing some of these revenue streams kind of manifest. Like I said, NVIDIA being a big one there. But you want to kind of have exposure to all of them because as I mentioned to March a couple nights ago, they're all kind of competing for market share. So especially on the cloud side of it, with AWS, then obviously you got Microsoft, you got Google who just kind of released their, I forget what they called it, and that went on a ripper there, but ultimately came back down probably to where it was trading before that. So you definitely want exposure there, but like I said, just look for any kind of stagnant trade out of that area. No, it wasn't Google Board. They had some, I mean, Google Board is what it is, but they just released some other kind of compelling platform there. I forget what it's called though. But that's what I'd be looking for going forward. And then when we finally get, we're not going to know when it's going to come. But when we finally get that first rate cut, and that'll be on one of the FOMC days, that's where you're really going to need to pay attention as to why we got that cut. Because like I said, if inflation is coming down, if the economy's strong, then we shouldn't be cutting rates. So, and that's like any kind of cycle that you're in with the Fed there. Usually that first rate cut is typically bearish for markets just because it means the outlook on the economy is kind of unstable. And that might not happen. They kind of like what Jerome Powell said today is they don't want to wait until inflation is down to their 2% target to cut because by then it's going to be too late. The economy is definitely going to be driven into a recession. So kind of walking that fine balance. And I'm sure when that time comes, I'll do another kind of write up there. And maybe we're looking at March. I know that's what the markets are looking for, but it might be a little bit later than that.
Let's see. And they're not really looking for January. March, they're giving it a 15% chance that we don't cut. So, I mean, they're looking for a March cut by at least 25 basis points. So,
Yeah, and if you look at that 1 week ago probability there, you can kind of see the increase. You're basically pricing in almost a guaranteed cut now going into the March meeting.
yeah, makes sense.
Hey, Tilly, it's 1K. I got a question.
What's up, brother?
Whenever they do cut, is that kind of where they open the door that they can no longer backtrack and add to it? Is it kind of like once you start cutting, is it kind of they got 1 foot in the door and they got to stick with it kind of thing? Or how's that
No,
work?
I don't think they'll, put however that saying goes, in the cookie jar. I don't think they'll, and I think they even mentioned that. I don't know if it was today or the last meeting, but they can cut, and then if another hike's appropriate, they can hike again. It's really going to be data dependent going on these next 2 years, because there is probably still some lags in the pipeline from these rate hikes. So they're definitely not going to do any kind of one and done. They're going to keep their options open. But that's like what I said too, is I think going forward until that first cut, it's going to be less of an emphasis on the Fed now. So you're really going to want to pay attention to the data. We kind of know the data that the Fed wants to see. They kept their target rate on unemployment the same, 4.1% into the end of next year. So inflation coming down, maybe, I mean, I shouldn't say they want unemployment to go up, but they want to cool down the job market more than what it's currently showing. And if you broke down the kind of employment report that we got there on Friday, a lot of those were cyclical job gains, government jobs, hospital jobs, hospitality jobs. So really that number looked a little bit weaker than what it showed, kind of compared to expectations. And on top of that, you had all the return workers from the strike. So they want to see the job market cool down a little bit, maybe unemployment tick a little bit higher, but ultimately inflation coming down, services PMI coming down, and doing this kind of without driving us into any kind of recession. So, and I think it's the more we hear from them, I think the outlook is a little bit better of either a soft landing or no landing.
Yeah, it's definitely starting to seem more and more like that. And I know at least one thing that made me laugh a long time ago is River used to always talk about how good of a job Powell was doing, even a year or two ago. And it's actually very impressive to see so far how right River was, and I'm sure many others, that obviously it doesn't necessarily matter if we think he's doing a good job or not. It really is completely irrelevant. However, interesting to see how negative so many people were, much closer to the lows in the market, and how significantly sentiment has changed over time. I personally find that pretty fascinating, and it just goes to show how sentiment is so well reflected in a price chart, right? Definitely closer to these lows, sentiment was incredibly negative, and as we've gotten higher and higher, set these higher lows, it's so interesting to see how things have changed so significantly as the economic outlook has changed. And I think it's such a good reflection as to why, although you don't need to be necessarily an expert on it, not everybody needs to be the Tilio of understanding everything, understanding the deeper meaning of every release of data. It's definitely crucial to at least be familiar with these concepts, to at least be in the loop on generally what's going on, because it definitely can have a significant impact on your performance in markets, when you're paying attention to what really influences markets, not necessarily just a chart. So
Yeah, and I mean, you don't even have to be any economist to really kind of grasp some of these ideas, but a day like today, you definitely don't want to be kind of in the dark as far as why we're getting the price action we are, because at that point, that's where your risk is really going up. You could have the best trade there is, technically speaking, but the move today didn't happen because of any breakout or anything like this. So kind of understanding that move, that's where you can either trail your stops a little looser, or not get caught in any potential reversals. And of course, it's hard when you got Jerome Powell on the press conference for an hour. You never know what he could be asked by some of these analysts, or how he answers them. But just that 2 o'clock move, I mean, that was just a quick glance, and then yeah, you might pay a little bit of premium to chase it. SPY might have ripped a dollar by the time you're able to dissect that in, let's just say 2 minutes. But at that point, you kind of can understand why we're going to rip, or why we are ripping, and your kind of tolerance for that trade should go up. So, and like I said, you don't got to be an expert to really kind of know what the markets would look for out of a report that we got today to get that upside.
yeah, I mean, I think even for somebody like me, who's definitely not an expert, was very easily able to tell the second you hear any confirmation of rate cuts, it's pretty clear that that's exactly what the market was looking for. But sorry, I cut you off, River. Go ahead.
I had a question kind of for Tilio. Thinking about rate cuts going forward, you think they just keep them small, 25 basis points, even maybe like, some of those 15, some of the smaller ones? Because I mean, that was some of the huge criticisms that, obviously Volcker and Bernanke, I mean, even Greenspan, all of them had some weird rate cut decisions to make, and they did them rather aggressively. And I know that as we look back at it, those are definitely considered like gigantic mistakes by most economists of today. So do you think this Fed likely sticks with the smaller rate cuts going forward?
Yeah, I don't think they're going to. This was a kind of historic rise in their hiking cycle. So I don't think that they hiked that much in that short of a time period. I mean, we were seeing 75 basis point hikes at each meeting. So I don't think they're going to go from hiking that fast in that short amount of time just to cut at the same kind of rate. Yeah, and if they do, that's where there's cause for concern. So I think you're going to see something like 25 basis point shed, maybe a pause, maybe another 25 basis points, maybe a pause. Because when you look at it kind of historically, we're really not at kind of high rates. Maybe if you're looking in the past, century, or for the 21st century, I should say. But I think they're ultimately just trying to kind of revert to the mean, and not do it in any drastic measure that causes kind of market volatility, because that's kind of another goal of the Fed, is not to give any fear to markets and kind of get this distortion.
That makes sense. And then, so because that's kind of what I've been thinking, because some of the previous Fed presidents that we had, they made very, very drastic decisions. I mean, at one point, Volcker did a 500 BPS cut, and it destroyed the American economy, obviously, and so that's what I had just been wondering was, they like rates are high. But historically speaking, like you go back and look at the 80s and the 70s, and they aren't high in the grand scheme of things, I mean, they got like, oh yeah, like there's Tosty's chart right there, 20% federal fund rate in the 80s. People, that was our parents buying houses in the 80s, and they were getting they were getting 18% mortgages on their house. And so I've just been wondering, they did increase it quickly, I mean, to go up, whatever it was, 300 basis points in a year was really big. And so I've just been wondering if that, was going to be the slow drop down. And then what if they do hike again? What if they feel like they go down too fast? What do you think the effects of something like that would be?
Yeah, I'm not sure. I think it really comes down to why they're hiking. Just like we're going to find out why they end up cutting at their first cut. So of course, in a market sense, and it depends on where we're going. I mean, if, let's say that we're sitting at 5.25 and they hike, early next year for some reason, then there's going to be some kind of chaos in the markets. But let's say that it's a couple cuts, then a hike. I would say that's kind of more natural in my eyes. And I would see that as calming, really no concern there, especially if they're doing it because of data that they're seeing. They don't want the economy to overheat again and risk of inflation kind of getting out of control again. They don't want to see a deflationary environment where they're hiking aggressive or cutting aggressively. So I don't think if they go from, a couple cuts, maybe hike, I don't think they're going to do it. I think it's going to be a slow, gradual decline lower. I don't think we're going to get back to essentially zero. But 2 to 3%, I think is more realistic, but I think that'll play out into the end of this decade.
Yeah, and that's exactly what I think. That was kind of going to be my next question: is how long do you think the rate cut cycle would last? I was talking with my pops about it, and we were both saying that this could go well into the end of 2025, just on gradual reductions. I know that at one point, I saw the CME was pricing in like 6 cuts next year, which is just, I mean, that means every meeting of the FOMC, they're pricing in a cut, which is not going to happen, in my opinion, and now the Fed has come out and said they aren't even planning on that yet. And so I would be curious to see how long this cutting cycle takes. And just want to see if you had an opinion on it at all.
Yeah, no, I think in a normal environment, it's going to be slow and steady. Yeah, probably up to 2026, 2027, maybe even later. It really depends on the economy, if it's overheating, if it's in kind of a steady contraction. But on top of that, we have the uncertainty of elections, of course. And, we know that Biden, now, of course, into election year, maybe he wants to kind of sway the hand of the Fed a little bit, for votes essentially. But we know Trump, he'll try and get rates down to 0% again.
Oh, yeah.
So that's kind of where it's going to be uncertain depending on how elections go next year. But I think it's going to be slow and steady as long as the economy holds up. But we can't see another COVID, kind of the flip-flop there. Basically where it was something completely new to everyone. I mean, the world economy is shut down, so of course you're going to have this free money kind of era, but on top of supply issues, that's what caused inflation, all
Yeah.
that money, all that demand. So I think I think they definitely want to just get back to a mean reversion there where it's not overheating, it's not contracting, it's slowly progressing like it has been.
I like that. And then I'm sorry I'm taking up all this time, but I had one more question for you. Do you think how much more you think the Fed is going to take off their balance sheet? I mean, I was glancing at it today, and I mean, it's down 12% or so from those highs. I mean, they've shaved. I heard Powell mention it, so that was why I want to look it up. They've shaved off about 12% off of their balance sheet. That's huge, when you think about the Fed balance sheet, and they've taken off, over 10% of it. How much lower you think they want to take it? Do they, because thanks for pulling up the chart, Tez. We can see, that 4 million, that's COVID. That's when COVID happened, where they went insane adding to the balance sheet. Do you think they try to get us back down to that COVID level, or do you think they have a
I
goal
think
in
with
mind?
everything we've been seeing right now, the Fed is trying to get everything back down to pre-COVID kind of levels. And even not even their balance sheet just from COVID. I mean, if you look at that starting at probably what, 2010, 2012, I mean, it's astronomical, the levels it's risen to since then. So
Oh yeah, yeah,
I think they have this wiggle room, and I think the kind of golden level that they're looking for with everything is just back to pre-COVID. They kind of just want to wipe out the last 3 years
yeah,
of this kind of irrational market, if you will. Not
yep,
not not the market speaking, equities market, but just everything that came from these kind of wild times that we lived in the past 3 years. So I
yeah.
think just reverting to that mean is the goal. And that's like everything. Everything always reverts to the mean essentially. So and I think that's healthy for the longevity of the US. And I think that's been a concern lately too. Kind of the overheating and the concern, especially with the debt to GDP. We're essentially a third world country there, and spending, 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 spending. So it's taking this break finally and getting a breather to kind of where it's more realistic, is I think kind of the healthiest thing we can get. And my hope is that, because I think he's done a great job, is that kind of Powell stays at the head there for some time, because I think he can do it. Now, I think he was obviously, no way you can not agree. He was definitely late to the party with inflation. I mean, inflation was sitting at what, 7% before their first cut or first hike, I mean.
Yeah.
So they definitely dropped the ball there, but coming late to the party to hike and inflation getting out of control, I think they've definitely handled it pretty damn well, getting it back down to where it is right now.
That makes perfect sense. That makes perfect sense. Thanks, Tilly.
Yeah. Yeah, I
Hey
mean,
guys.
I don't think anybody could say it better than Tilio. Go ahead, Rev.
Yeah, so the 10-year hasn't been below the four since 9 September, back to that area. So that right there is pretty big to me for the economy standpoint. I like that because it could get a lot of people who are really scared and worried and fear, bringing it back down for the industrial side as far as the economy, running a business and such. Things could people could be a little more loose with their money now, as well as the housing market. So per what Tilio said, going towards the industrial side, that's where DE and CAT, I'm dragged right over to there to immediately look at them. And then you got oil side, crude, they fill in the reserves, bump down low to 67, it's picking back up. That's going to be an interesting one to watch to see how crude picks up from here. I know OPEC's going to want to slam cuts to bring the price up, but that's an interesting run with crude being so low. But I'm hoping the industrial side and some of the real estate gets to start moving because some of the builders maybe open things up with the rates dropping down. And then, yeah. And Powell also noted on wage growth is increasing. That's really good. That's very good. So wage growth is increasing. So the economy's doing good. You can see in the meeting he was completely comfortable today. So as far as everything, yeah, I hope Powell stays at the board. I hope that 10-year doesn't peak over that 4. And yeah, and the money supply too. It's still way up there. People got money. So yeah, the markets look good.
Great points, Rev. Appreciate it.
No problem.
Yeah, you would imagine they start to fill the SPR up, and not kind of drop the ball like they did. whenever that was, 6 months ago or so. So maybe that could put a floor in oil prices. But even with OPEC and the oil markets haven't even been reacting bullishly to some of this news that you would think would cause a rise in oil prices. I mean, the last round of OPEC cuts, even though they were voluntary. So, and that's where you got to think too. And maybe those were laid to rest somewhat today would be the concern over a broader economic slowdown, and I think that was part of the reason why we saw the 10-year move from 5 to now 4%. Part of the reason why you saw oil just on this steady traverse lower drastically. So, and that's where it just circles back again to just the data and the data coming in to where the Fed wants to see it, which is, obviously there's good data, a strong economy, there's bad data, and we've been walking that line kind of where the bad data is what you want to see because of the Fed. But now it might be the time to where we can finally, and it might change their projections if the data starts coming in hot, but you probably want to walk that fine line again where good news is good news and bad news could be slightly bad news. I think we're at that pivot now to where we don't need to see. Now, of course, you don't want to see average hourly earnings, upticking higher month over month constantly like it has been. But, unemployment sitting at 3.7% or whatever it was, kind of the steady job growth that we've been seeing, especially if that can kind of spread out to more sectors of the economy. So I think that's what you would want to see. And yeah, then maybe oil can make a rebound there off of demand. Yields, that's still a question to me because you still got China kind of selling at a ridiculous rate. Japan's not buying, so our two foreign biggest debt investors there. So that would be going forward, the Fed out of the picture. That would be the only reason I could see yields possibly moving higher in the coming years is just that supply and demand imbalance. But you'll just have to kind of watch what China does, what Japan does. China is obviously trying to do whatever they can to stimulate their economy right now. So investing in U.S. debt definitely isn't the move there, but those are our two largest foreign investors. So
I did see, did they just crack under a trillion though? Didn't they hold like a trillion in our debt or something like that? And they just cracked under that big major level because they're trying to buy some of it back.
yeah, 1.2, I think was the last
Okay.
I saw, but that was maybe 2 or 3 months ago. I think 1.2.
1.1. Okay, maybe I was thinking to break below 1.2.
Is Japan our largest? Are they, or is
Yeah,
China?
I think it's
Japan
Yeah,
is.
this.
they're the top two, as far as I know, foreign wise.
And Canada, doesn't Canada hold a pretty dang good chunk?
Canada holds a decent chunk allegedly in January,
There you go. Yeah,
but Belgium holds more than them. So
yeah. But I mean, Canada being our, that's our neighbor being the eighth largest holder of our debt.
That
But
might
that
be
is a
your
really
neighbor.
interesting thing.
That
That
might
is
be
really
your neighbor,
interesting.
River, but down here in Florida, that ain't our neighbor.
But wow.
that's a
Wow.
good point. Yeah, we got nothing to do with them. Mexico's my neighbor. I don't know.
Wow.
I don't get involved with all that.
Yeah. Well, I unfortunately know Crash.
Well, Tilly, do you still have to get moving? It's your 6:45.
Yeah, I was gonna head off at 9:45, but I'll hit the gym in about 10 minutes. Let it die
All
down a
right,
little
cool.
bit first.
All right.
Why don't you
Hey.
throw up, I didn't really look at, sorry, who was that?
Oh, I didn't want to cut you off. I was gonna, there's a chat question, Toasty, but we can get to in a minute.
Well, yeah. What were you gonna say, Tilio?
Oh, you might as well get to that first. I was gonna say I didn't really look at any you'd imagine there was definitely some breakout potential names today. I didn't really look around, but yeah, get to that question first.
Yeah, that
All
kind
right.
of
So
ties into it. The trade floor question, Toasty, was once we're at or break all-time highs, I'm assuming SPY and Q. The question was how do you chart that and trade it? And maybe Tilly almost touched on it. Maybe we look for laggards or single names, or what the question was kind of what do we do once we break that?
I mean, if you're looking on the ETFs, fibs are going to be your best bet. You know,
Yeah.
a fib
Yeah. I
extension
mean,
above the highs is going to be the typical way to do something like that. But if you're looking for single names, look for the laggards. At least
yeah,
that's
and
my
I mean,
opinion.
in terms of getting technical levels on things trading above all-time highs, like River said, yeah, you do fibs, and it's really those psychological levels. So for SPY, it's going to be your 490 and obviously your 500 if that's a fib or not. And same idea with the SPX, right? It's going to be 4,800, which is pretty much your all-time highs, then your 4,900, your 5,000, and that's a strategy that you can repeat, on any equity, any derivative. And yeah,
You can also use some of the statistical things, B bands if they're far enough above you, even a Keltner channel, those kinds of things can all work for you as well.
yeah. So here's would be your
SPY to
fib targets.
500. You already know that.
SPY to 500. I've been saying
There
it.
you go.
I was saying that shit at 350.
And you were saying it at 480, so
Hell yeah, it was, dude. I never stopped, dude.
which apparently if you trade
Yeah.
on Webull, you didn't know SPY was at 480, which that's a whole another story.
That's insanity.
Watch Nvidia tomorrow.
Yeah, so I think we've definitely covered, a lot of the kind of macro perspective. We've recapped kind of how we got to where we are, things to look for coming out of the Fed, and just general economic data, and even some of the charts. And now I think I want to cover some more just kind of random topics, and so not necessarily random, but just different, right? A little bit less on the macro. So we have Grizzlies here, we have Flips here, and obviously still Tilio. So I don't know if you guys are willing, but I'd like to talk a little bit about the crypto names, just because we have Grizzlies in here, and we don't get them in lecture a lot. I mean, what's kind of if you're able to talk, your kind of 1 minute long-term thoughts here? Crypto kind of seems like they lagged in the move a little bit today in terms of the broader market. Do you have kind of a minute to talk about your thoughts here, Grizzlies?
Grizzlies the GOAT.
He might be sick still. He sounded like shit yesterday on a Call of Duty, and he sucked ass. So
okay, yeah, it seems like he's got to get his Timbs off, and he's got his ski mask on. I think he's still in the lamb, so maybe he's busy. All right, well, there goes that idea out of the window.
Toasty,
But we got
pull that lift
lift.
chart up again real quick, just because that was a large flow that I'm not saying people might want to follow it, but anytime you get a hit that big, it's definitely it can catch your eye. So I believe it was the 20 strikes for regular February expiration. Obviously, it's in that gap right now. And these are the kind of stocks that have been really running lately.
Yeah, here you go.
I don't know the short interest on Lyft, but it was a large trade. They're definitely
This
looking
one?
for something. Yeah.
1.75 million.
I think the volume's probably sitting over 50,000 right now, but now obviously you could go with the 20 strike for cheaper, but smarter to go, of course, at the money, something like the February 15th, depending on the open interest there. I might have added 11 volume to those today. Or you could buy the 15, maybe sell the 20 that they're targeting there. So those could be, when it comes to options activity, I mean, that was a big hit. And that was just like on SPY a few weeks ago. On the newsletter, I think it was the 461s I noted, and then like might have been the 472s or something. And those were multi-million-dollar orders as well. So not all the time are these, large money buys right, but it's definitely something you maybe want to keep on your radar. So
Yeah, I mean, you're probably already up pretty good. You bottom picked those this morning, huh?
no, I didn't see that flow until last hour of the day or so.
Oh, all right. So we can maybe add to your 11 volume. All I
But
need
just
to know
something to
is
keep eyes
all I
on.
need to know is
Toasty
how
was
many is
trying
too
to
many.
market order him right there. Did you see that? Dude, market's
How
closed.
many? How
Market's
many is too
closed.
many?
No, I mean, something like that. And of course, like I said, you're in the gap, maybe breaking that bull flag there. That's the most I really looked at the chart in the last few minutes of the day, but it was a large enough size to not just YOLO like you like to do, Toasty, but to, maybe just keep it on your watch list.
You don't have buying power for 50, bud. So Talia, because I want to ask you some more questions, bringing up flow, because Flips uses flow all the time. He definitely watches more of that like intraday flow. He watches more of the I mean, basically the fancy time and sales version of flow. How much weight do you put in it? I mean, Lyft, obviously small market cap, cheaper company. Very rarely is there $1 million hits going on that. How much do you care about flow? Do you really only care when you see something like really out of the ordinary like that? Like, let's be real, that's probably one of the very few $1 million orders on Lyft contracts that's ever been placed. Do you wait
Yeah,
for that?
it's something like that size, and Lyft wasn't even on my radar. Now I will say that they weren't of size though, but they've been hitting Lyft now for like 2 weeks. But this was the first time it came in with a crazy size like that. And since I'm not looking at it, as far as the weighting I put into it, it would definitely be a little bit less, as far as if I'm going to try and base something off of it, maybe 10 to 20%. Now, if it was a trade I was looking at and I saw not even just sizable flow hit, but maybe just back-to-back flow hits, then I would put a little bit more weight into that, maybe to confirm kind of the bias that I have. But yeah, something like that. And it was kind of like the Mara puts last Friday as well. Mara wasn't on my radar. And sure, Bitcoin was definitely extended a bit into its Bollinger Band there on the higher time frame. So it could have pulled back, but the momentum was on the side of the bulls. But then you had that, I don't know what it was, 7,000 contracts, 1 week out until expiration of the 16 strike puts. And, what do you get then on Monday? A 15% down day. So anytime it's kind of like that where there's something unusual about it, I would say, then it could have a little bit more of an interest peaker, I should say.
Okay, that makes perfect sense. And then so sometimes I see him like, I don't follow any flow, as you know. Oh god, look at that AT&T calls. Look at that. Bullish.
The three strike.
Dude, but look at that. Look at that order for 6,700 contracts at the ask. $37. I should have followed that.
That's both of us, River. That's us.
That's us. Dude, that was me today, just hammering tea. That's the best stock ever. But so Tilio, I watch Trade Flash. That's the only that is the extent of my flow. Like I'll see things come through on there. And this was one of the first weeks where I've really seen like single leg short date orders. Like I saw a guy hammer 4,900 weekly, like 395 QQQ calls. Do you ever pay attention to that kind of stuff? Like the shorter date ones? Like I know we never know what people are going to do.
Especially around a week like this, or even last week where you're testing those July highs, 460707 on SPX. And I think I even mentioned that to you and Toasty.
It was insane.
They were hitting, I don't know what it was, it might have been a Monday expiry 462 call or something. But yeah, a week like this, and especially yesterday, I think it was, the 468 calls that I think they expired this week, maybe next week, but that was another $3+ million order that came in there. So that's unusual because of the amount of money. It's definitely an institution. And then they're going short dated. So they're kind of contradicting what they normally do. Institutions don't really ever take that kind of crazy risk. So it definitely wants to it catches your eye for sure. But around an event too, you never know. I mean, unless you can break it down if it's a single trade, but at the end of the day, you're never going to know if they got, early 2024 puts in size that they're just hedging. So it's definitely it's going to get tough too to kind of catch some of that flow because, I mean, even just earlier this week, we hit the most daily options contracts traded in 50 years. And a lot of that's because of 0 DTE. So the options volume is getting kind of crazy. So you really got to try and have, I guess, your system of what you look for and kind of go off of that. So me, it's usually those large orders, unusual orders, or just ones that maybe confirm my bias.
And because that answers my question perfectly, because that's what I've seen on that Trade Flash. I'll frequently see, 10,000 contracts of QQQ calls, and then instantly some sold calls or the exact same size of puts, or like it's very obviously some sort of spread. I don't understand spreads well at all myself, but I'm like, okay, that is obviously a two-leg trade right there. But this was just like, the last 10 days has been one of the first times where I've seen something and I'm like, that, a desk just bought 5,000 3 DTE contracts. Like, that's just so out of character for big money that I wondered if those were worth watching. Me and Lambos actually followed one. I sent you one even. I think it was those QQQ 400s or something. And I mean, they worked, they
Yeah,
worked.
they're deep in the money now.
Yeah, they are deep in the money now.
But yeah, and this week too, at least from what I've noticed, shorter dated, the flow is heavily skewed to the bull side. But like I said, you never know unless you're really good at following, the size hits and seeing if they are single legs or multi legs. But you never know if they could be hedges for, say February expiration or March expiration puts.
Yeah.
So that's why a day like today, yeah, really was, I didn't do anything until 2 p.m. and that was the first trade I took. So of course, in hindsight, you're going to look back and, well, damn, they were nothing but calls are coming in short dated. But, as long as you still take advantage of that move, once you get kind of confirmation, which was that statement at 2 o'clock, it's not like you're going to miss out. You're still going to capitalize on a move. You might just end up with, 100% rather than 150% by being in early and kind of trying to predict it.
Adding that risk. Yeah. Yeah. Thanks. Appreciate it. I'm terrible at reading flow. I just ask for AT&T flow and follow it, like always.
It works, man.
It says yet to miss.
Yo, what's up, Grizz? How about that crypto?
Yeah, Grizzly, can you talk now? Did you send that girl home?
Yo, you guys can hear me?
Yeah.
What's going on?
Yeah, man. So wanted to talk a little bit about your thoughts on kind of just crypto markets in general. Obviously, you're kind of our resident expert, and probably forever will be. And just kind of wanted to hear, your perspective on where things are at, where things are headed, and how you plan on trading it.
Well, crypto itself is volatile, as you guys know that. I'm still looking for, I'm still leaning bullish, upside as of now. At the moment, as you can see, like Bitcoin, follow the market and everything like that, especially with the Fed news and stuff like that. But what's very interesting, what people have to realize is obviously less than a month, an ETF might or might not get approved for spot trading, for spot ETFs. Obviously 90% was the chance of it being approved, but we should see, because the SEC always has something underneath their hands. Maybe they could delay it, maybe they could just bring something up, but it should be very interesting. And anybody that are in leaps, for next year and stuff like that should be up hundreds of percent. When it was mentioned September, I mentioned I got into some riot leaps and stuff like that. But I don't have very much to say. It's just it depends on day by day. I'm waiting on this ETF. There's not really much going on. I believe that we're pricing in though from June. If you look at June prices for Bitcoin since the start, but there's nothing really much.
Grizz,
You
last
know,
night on Call of Duty, what did you mean when you said that you think Dogecoin might be going on a bull run?
um, I mean, obviously you can look at Doge too. Doge always have its demand, especially with Elon. He's gonna ship that rocket to the moon with the Doge. With the Doge picture. I don't know if you guys heard of that. Did you
Sounds
guys
like
know
a buy
about that?
signal to me.
Yep. So, but no,
This is terrible,
overall,
man. This is really
oh,
going south when we're pulling this chart up.
but I'm saying overall, like like a lot of people came up to me, messaged me, DM me, and I always tell them like you don't really have to focus on Bitcoin if you want to get into crypto trading. You could look at coins like if you look in the crypto section, in the Discord, you can look at all these other coins that I invest in, I spot buy, like coins like TIA and stuff. Because everybody wants to trade Bitcoin, but Bitcoin is such a high price at the moment. It's 40,000. Unless you have like a couple $100,000, maybe you could do something with that, but there's other opportunities with these other coins that are flowing in, because if this ETF actually goes through and, we're going to see a pump. My target is 50,000 for ETF, but definitely I'll be selling majority of my shares in that event. And then maybe I'll wait like 3 weeks for the consolidation and then definitely buy those dips that we're gonna possibly see after the event of the ETF, and then just wait for halving for Bitcoin and stuff like that.
When's that come next year? Late next year?
No, it's actually in April.
So all
Like a
that to
couple
say, stay away
couple
from
months
Bitcoin
ago.
and get ready to invest in actually a OOT crypto coin. It's coming soon.
Oh no, because like what
Um,
you were saying last night, Grizzlies, is you're right now more interested in the leverage side that you've been doing, or the crypto miners, because Bitcoin trading at 40,000, to make 10%, that takes it back up to what it was at last week, 44,000, where that same move in Bitcoin to the underlying miners, that could be 100%.
Yeah. So like, for example, like I don't know if you guys been like keeping track on the tabs, the calls that I post. So like, for example, like a stock like CLSK, you know, I bought like a bunch of shares recently actually for it. And it's been going good actually. It's been booming, it's a mining company, especially like all these, Riot, Mara, and that stock specifically, those things, potentially could demand prices even higher, especially halving coming in. Obviously halving is a big deal for Bitcoin because, the shorter the supply, the high demand the prices for Bitcoin. So obviously we might see an all-time high. That's, everybody's looking for. So like, these stocks are not too bad to look into before you put your money in. I mean, I did my opinions, I did my thoughts on them, if you've been paying attention. But like I said, on the future side, what I do for crypto, like investment on futures, if you guys never heard of that, you should look it up. It's like another money making machine. It's just like stock options, but you're just dealing with only crypto, which is another good income, if you know what you're doing, or you could just follow me. I post the calls all the time. If you guys look at the crypto tab, there's fucking calls all the time there. So, I mean, yeah, just everybody should keep their eyes open within this month, beginning of January, right after New Year's. 1 week from New Year's is the most important week for crypto in general. So when you guys see Coinbase either going to 200, don't be surprised. You know what I mean? It's not a never thing.
you heard
But
it here first from Grizzlies.
yeah. If a couple people follow the tabs, you can't catch every move, but once you catch one good move, you're in the money. You're chilling. So, and
Appreciate it,
definitely,
Grizzlies.
definitely, since there's enough people here, I'll definitely do a lecture. I can't specifically say when, but I'll definitely do a lecture of, video recording and stuff like that, live trading crypto. So everybody has an edge of like what exactly I'm talking about, what I actually do in the crypto market. A lot of people know what how to trade it. But for the ones that are interested, I'll definitely do a lecture on just crypto in general, and you guys can ask me any type of questions.
Yeah, that'd be super insightful, Grizzlies, 100%. One thing I
Yeah.
want to say though is that just so you know, for future lectures you show up to, this is a gun-free zone, so make sure you put that in the lockers before you walk in next time.
I'm surprised I was able to be talking right now, bro.
Yeah,
More
that girl
sick
left quick,
shit.
huh? You got her to leave. Maybe it was a guy. Either way, appreciate your input, Grizzlies, as always. That said, we're definitely running pretty deep in this lecture, so I kind of want to open up to see if anybody has any kind of closing words to wrap this up. Before we start giving too many kind of closing words, I want to just thank everybody, those of you who are attending and participating this evening. Obviously, those who are attending these lectures aren't the same without all you guys here. And show some love to the people that attended here tonight. We had River, Grizzlies, Rev, 1K, Tilio, Nando, I think that's everybody. Flips was here.
I think Shark just hopped in. He said he wants to say something, I think.
Oh, he did? Where's
Yeah,
he at?
I think he's here.
Sharky.
I see him, but I don't know if he wants to say something. We'll see. He could tell me if he wants to say something because he's yeah, he pulled up.
Damn, we got Shark's old team member in here too.
All right, what do you guys have to wrap us out? Let's go down the list here. River, what do you got?
Dude, I got nothing. This was a great lecture. Thanks, Tilio. That was awesome. Thanks everybody for being here. A real fun lecture.
Yeah, it's hard to follow up with everything that Tilio's dropped tonight. Grizzlies, what do you got?
No, pretty much. Yeah, nothing really. I mean,
All right.
you
Love,
guys are
man.
awesome. Thank you for having me. I love stuff like this. I'll definitely attend more of these lectures. Because it's always you always learn something new from, different perspectives and different traders and stuff like that. So it's always good knowledge, man.
Yeah, and that's an important point to note too, is that, I would say probably everybody in here except Tilio probably has learned something this evening. And it just goes to show that no matter how experienced you are until, you're 10, 20 years deep, there's definitely a lot to learn, at least from this crowd of people until, you get to Tilio's level, which definitely nobody's too close yet, but we're working on it. Outside of that, Rev, what do you got?
Nothing, dude. It's a great lecture. But well, some of the people that don't know Tilio, yeah, if you ask him a couple questions, sometimes he'll drop little breadcrumbs, and trust me, you can make some pretty big loaves out of those.
Oh yeah, I've made some big loads. All right, 1K, what do you got?
I got nothing, man. It's a great lecture tonight. See y'all tomorrow.
All right, Nando, you've been silent. What do you got?
Not much, man. Great commentary. I definitely learned a ton. Thank you guys.
Happy to hear it. All right, Tilio, you take the cake. You win. What do you got?
I gotta keep your eyes on lift, I guess, for the next month, given that size, and watch 4743 SPX.
All right. Yeah, we're getting long. I'm gonna add some volume. I guess last question for you, Tilio. How many is too many of the February 16th, 2024 15 calls for lift? How many is too many?
Apparently 25,986 is okay.
I got 11. Maybe that's because my order didn't fully fill. Maybe it's not because of that, but I'm in 11.
Well,
Did you also get the alert that said you didn't have enough buying power for 50?
No, I think I walked up the bid a little bit. I wasn't going to chase it higher on myself. All right, guys,
I'll
thanks
be
for
walking
having
this
me.
up at open. I'll be walking it up. All right. Yeah.
Yeah.
Thanks everybody so much for being here. Show some love to everybody who came in tonight. We appreciate you guys all being here. We'll do another one of these in the next couple of weeks, probably in the new year, and different topic, different crowd. And yeah, guys, appreciate you guys all being here. We'll see you guys on the next one.
Toasty, don't end it yet. I'm heading to
What
the
happened?
gym, but you got a couple questions there. I just want to make sure that you answer them. Jamal.
What do we got?
Jamal, Wildcard, Solly, and I think that was it.
All right, let's get it. How to set a stop loss on TOS. We got, detailed videos on that, but in terms of doing it, essentially, if I was going to set a stop loss right now and I'm using the active trader, all you do is just click the sell side of the ladder here.
And make sure you're below the bid.
Yeah. And make sure you're below the bid or at least below your limit. Unless, yeah. Well, actually, never mind. I guess I'm thinking of stop loss if you're red, but yeah, just click the right side of the ladder here. Pretty much it's trying to set a stop, but it's actually trying to sell them. How do you become consistent? You make money, then lose it. Yeah, it's definitely a multifaceted question that, is not one that can be answered with one sentence. But to give you a couple pointers, obviously I would encourage you to reach out to myself, reach out to River, reach out to the rest of our team to get a little bit more personalized tips. But from a general standpoint, in terms of becoming consistent, a lot of it starts with educating yourself, being competent on different subjects in the market, including technical analysis, including a little bit of fundamentals and just kind of larger term macro perspectives. That's number one. If you can't understand charts, can't understand the fundamentals of options, you're never going to do well. If you're trading options and don't know how they move, it's just not a recipe for success. And that's something that we see a lot of people do, is just get right into trading options. They got no idea what the Greeks are. They got no idea why they go up, go down. It's something that has completely skipped their mind in terms of the knowledge they've tried to build. And we have all that here, resources for you in order to learn that real easily. Number two, obviously it's going to come with discipline, right? It's going to come with creating a set of trading rules for yourself, whether that's having a consistent position sizing, whether that's trading a consistent set of stocks, whether that's entering every single trade that you take with a plan and not just willy-nilly. But those are, a couple generalized tips. Obviously, it'd be interesting to hear a little bit more about your specific situation, whether you've been trading for a while, whether you came to a lot of lectures, or maybe you're brand new and all these tips apply. But yeah, I encourage you to reach out. It seems like we need to have a little bit more of a detailed discussion, but hopefully that helps to get you on the right path. Rodrigo says, can you explain the lift trade again? Pretty much it's just this flow hitting is really what it's based on. Lift.
Doge.
What was that?
Dogecoin.
Oh, yeah, we're not talking about that. Yeah, it's just really just this unusual flow hitting $1 3/4 at the ask for some Feb 20 strikes. What is that? 33% out of the money. So pretty far OTM, large size, obviously volume is 3x the OI. So just a significant hit here is really what the trade is based around. But obviously taking a look at the chart, generally really strong depending on any type of point of view you look here, sitting in this pretty large open gap following that worse than expected earnings report. Volume patterns generally look favorable. All of the above average days here are bull bars, especially the recent price patterns, right? Bull bars are all closing near their highs. Just a constructive trend higher, 9 above the 20. All above the longer term moving averages. So a lot favorable working here for this trade. It's just a matter of that flow is really the catalyst, at least until OIs. But this isn't the idea that I created. This is just things that I'm finding on my own here. What does it mean when volume is higher than open interest? So yeah, volume essentially represents the number of shares or number of contracts traded, and open interest represents the amount of contracts that actually exist. So for example, if you hold 10 contracts in your portfolio and you're the only person that holds contracts with that strike expiration and ticker, then the open interest would be 10, right? But let's say you bought and sold those 10 contracts twice. So you bought 10, then sold 10. That would make it 20 volume, essentially. So the volume is the amount of contracts that have exchanged hands. The open interest is the amount of contracts that physically exist, if that makes sense. And yeah, like River mentioned, the OI updates once a day, usually at the open is when the OI updates. So for example, let's say you see this lift here, you see this 51K volume and the OI is 16K. If, for example, that OI tomorrow is 16.8K, it essentially means that not a single one of those contracts was held overnight and they already have sold the entire position and it's gone. So you'll want to see that OI carry over into tomorrow. It just indicates that they're still in and the position's still open for whoever, whatever trader, whatever desk decided to take this position. All right. I miss anything, River?
Nope. Good job. Proud of you.
Perfect.
Thanks.
I'm really happy
Thanks.
that I'm really happy that you didn't even pull up the Rivian chart even one time. Like that's just great.
Oh, I pulled up. You didn't see it. I pulled up Roblox. I pulled up Lucid.
Dude.
I didn't pull up AMC.
Great
But yeah, Rivian's looking good, dude. This
Pull up
looking
T.
good.
Pull up T.
I did, dude. T's looking real good.
Yeah, Paul,
T's looking real good.
dude,
T fish.
this morning, me and 1K were hammering T, you know, and at 7:45 this morning, I said, I'd love to watch T flip green on the day. Keep going left, right around there. On that big red candle. That's where I was saying I'd sure love to see T flip green on the day.
Well, I'm sure you would. I'm sure you would down there.
Yeah. And now go up to the top left of your screen. A little more, up a little higher. And let's what we closed at today on there on that T. That looks like
What?
green on the day to me.
Oh, up here. Yeah. I was like, what? What do you mean up left?
Yep, did.
Yeah, this thing's looking ready to go. Did you swing anything on it?
Did I swing? Of course. I swing.
Hell yeah.
I swing. I have something regarding AT&T in my portfolio every day of the week. Every single day I have an AT&T trade running.
I like that. We'll get in there.
I
Rev,
hit some
somebody asked
80%.
about your
Yeah, hater.
I hit an 80%er today on it. It was good. A couple other people even got in there with me. I saw, I think B5 was in there. SMG was in there, dude. We're getting people on these boomer stocks, dude.
Dude, you got to be careful with that, man. Before you know it, you trade these boomers enough, and all of a sudden you got an AARP membership in a wheelchair.
Dude, nah, dude. What my biggest fear is that there's people are actually going to trade them. You know, got to keep them. They're the secret, dude. You know, they're the secret boomer life.
Hey, guy, let me answer haters. Hater, you still there? He's asking me about Adobe.
He's here.
I
Yeah,
figured
he's
I'd
here.
cover that. Dude, yeah, so last week we played Adobe's. I don't know if anybody was following that, but me and Empanada turned me on to it. So we were playing Lulu's, and I picked up 10 calls for $8.
Oh God, Rev. Here we go.
Oh, yeah, I
Here
know.
we go. Rev, God.
Well, dude, I'm gonna try it on Adobe tomorrow. He asked me about it. Basically, I put it in there because Adobe, dude, their earnings report is popping off 70% year-over-year EPS. So
I says I picked 10 calls up for $8.
Dude, and he bottom ticked them. Those things were
I sold them
so
for 45, and I'm all happy. And yeah, they went to 1,400 at the end of the day. Wild, bro. But
Damn.
Adobe's coming up, and they had killer earnings. They got shook. Those calls will be crushed when it opens up tomorrow. Basically, I look for the spreads on the 0 DTEs for Friday. And yeah, pick at them, dude. And if you can pick one up for cheap, like
What are we gonna hit? All I gotta
I'm
hear is
thinking
a
like
strike.
640, 660 maybe, and just hold on to it and don't sell it. Just buy one or two.
Just don't sell it.
Yeah, I'm gonna try that tomorrow. Just stick on
Rev's
that one.
practicing the simply just hold method right here, dude.
But dude, you know how many times if I just hold how much money I would have, River?
Dude, you're telling me I was looking at I was looking at AVGO like 1,000 calls or something like that. And I was like, dude, they're $350, dude. I don't want to do that, you know. And now they're 10,000, I think.
Look at these wicks here. I'll pop it on.
What are those AVGO thousands at?
9,400.
Dude, yeah, 350 was apparently not too expensive.
Dude, yeah. So Adobe, killer earnings. Just read the report. I like it. Looks like they got crushed a little bit. So when you look at that's
Dude,
what
I
I'm gonna play
love it,
tomorrow.
Rev. I'll buy the blood on Adobe with you tomorrow.
Dude, yeah, I'll hit it. What are we
Dude,
hitting?
Look
So
at
we're hitting
that.
we're hitting the 640s. Where are we setting the limit at?
Dude, I don't know, but those 640s, I feel so bad for anybody who's in them. Like they are gonna wake up to a $1,200 contract being worth $25. Dude,
Well, at least 700 people were in them.
Yeah, dude, 700 people are gonna be sad. Oh
You're
no,
gonna
that's
see those
OI, dude. We
people
had 700
trying to sell them though for $2,500 though, or you know maybe the 12 they'll try to sell it for 7, then 6, then
dude.
5, and 4. But
Don't
then
worry, dude. Them hedge funds are there following their obligation to provide liquidity. If you're trying to sell, they're required to be there for a buyer for you. So there's always a buyer
But yeah, that's what
Yeah,
I'm
at
watching
some point.
tomorrow.
at the bid.
Yeah, exactly.
That's the problem. You know, there's always a buyer at the bid.
All right, everybody.
Okay,
I
bye,
think we
Toasty.
killed
I'm
it.
out of here. Thank you, everybody. Have a great night.
Yep. Thanks everybody for being here. Yeah, don't hit the Adobe calls. You're gonna blow your port. We'll see you guys all tomorrow. Thanks everybody so much for being here. We appreciate all you guys' attendance, and yeah, we'll see you guys tomorrow. Adios, everybody. Thanks for coming. See ya.